Hi, it's Lee, and welcome to the Tesla Economist. I feel like the sentiment has changed for Tesla since the latest shareholder meeting. The vibes from Elon felt a lot more positive. It felt like he was excited and motivated about Tesla again, perhaps due to some recent breakthroughs, or maybe the fact that he can step down as CEO from Twitter and concentrate more on Tesla again. But whatever it is, I feel a renewed energy in the stock. And by the looks of things, I'm not the only one, given the stock is up around 7% since the meeting. Makes me glad I bought that stock option just before. Oh dear, old habits. It was just a small one, but it's doing well. I had a feeling. Now, the technical analysts might tell you that we could see a gap in the stock, and if it hits 183, then it will reach 200, etc. And they could be right. It could actually run to 200 again, which a lot of people doubted would even happen sometime this year. Tesla is a story stock, the company that is making the biggest impact on renewable energy for the world. However, there are times when that story feels less believable than other times. I mean, if it does come into fruition, then there's almost no limit to Tesla's stock price. Hence why FOMO can be so strong with Tesla, and how the stock price can sometimes run to levels that are unfathomable for most stock analysts, let alone Tesla bears. They can't comprehend it and just say things like, but the PE ratio is far too high for an auto company. Yeah, if the economy gets really bad, we may even see negative PE ratio, whilst Tesla still grow their deliveries and production over the same period. Why? Because Tesla is not a car company. I mean, look at Apple and Microsoft stock prices right now. They're almost back at all-time highs, even in these economic times. Sure, they have profits to support them too, but what about Amazon? That's now only down about 35% from its high, compared to Tesla down around 57%. The narrative to Tesla being a car company got too strong, and has been caught up in the cyclical side of the economy and recession, being conditioned as a car company. And even if profits really dwindle, well, the same is true with Amazon. My point is that when Tesla's story gets more believable in the market, then the company is viewed more as a tech or AI company rather than a car company, and thus gets priced accordingly. Tesla's story, or master plans as they refer to them, become more convincing that Tesla might actually achieve them. And when we see Tesla deliver more on their promises and objectives, then this also further reinforces this narrative and belief, except we simply haven't seen anything happen for quite a long time now. Really, in my opinion, there hasn't been anything tangibly impressive since Tesla managed to upgrade the Shanghai facility and hit about triple volume production. Since then, we've seen very little. No major progress with 4680, a moderate ramp increase in Berlin and Texas, an FSD update or two, but no game changers. Yes, we've had some announcements and they did break ground on the lithium refinery, but this is not major. And a lot of potential rumours going around too. Once we start seeing more of these events actually materialise, then the sentiment becomes stronger. The Model 3 Highland and Mexico breaking ground are going to be the next two that reinforce this the most, which could possibly be as early as next month. Some people are even expecting the Highland to use the unbox manufacturing technique. I find this highly unlikely. Tesla have moved on from the Model 3 and are forward-looking. The Model 3 is only about 500,000 or so units a year. Elon just said the next two products are 5 million a year. Do you really expect Tesla to put that much effort into the Model 3 when they have this enormous fab in Mexico to contend with? Do you really think that Tesla want to risk the Model 3 production being down for an unknown period, testing new manufacturing techniques? Of course not. Look how much difficulty the X and S facelifts created. The Highland is just going to be a facelift to stimulate demand a bit more again, and a cost-saving exercise to match the new mass-market price points and increase profit margins. And then we'll see Tesla do exactly the same again with the Model Y Juniper update next year. But still, seeing a new Model 3 will give Tesla more energy, as it is feeling somewhat neglected in some ways, for the reasons I mentioned before. However, the main energy for the stock price this year is likely going to be the Cybertruck launch. So many doubters as to that model ever being produced. Seeing it come off the production line is going to be huge for the company. I mean, this is a sensational product. There's never been anything like it. It's an incredible engineering feat, which will remind people of what Tesla is truly capable of, and how they do have the best engineers doing amazing things like this. But seeing that Mexico factory break ground for me will be big. Then seeing drone videos of all the updates happening there and how fast they're able to build and get up and running, watching all the casting machines going into the factory and all the other exciting things we saw when they were building the other factories. Of course, eventually they will need to show us what they intend on building in there as well. Right, the Gen 3 product reveal. Product? No, products. The 2 new products, which is safe to infer, a compact Tesla and a van, that are going to be responsible for about the next 3 times vehicle production growth and take us to around 8 million units a year when fully ramped. 8 million compared to around 1.5 last year. Well over 5 times as many vehicles. And if Tesla really have got production costs down to half a Model 3, then there'll be a lot of profit associated with these cars too. And when you multiply a lot of profit by 8 million vehicles, then the stock price could be wild. Then backed by the potential chance of FSD sold on top of these vehicles, and then the stock price literally goes further than the moon. I mean, that could still take years, but in the meantime, it's about how much people believe it's going to happen. And if Tesla are proving that they are winning in other areas of the business, then FSD also becomes more believable. But either way, there's no other company close to a scalable, affordable solution to FSD, because no one else is doing it. So if you believe FSD is possible in the future, then Tesla is your best bet. Same for bots. No one else is making an affordable, scalable bot with AI. No one is even close, let alone one with batteries that can actually last a good part of the day. And if you believe bots will one day be in the future for the consumer, then again, Tesla is your best bet. I'm also excited about Tesla's advertising. I hope they actually do a decent campaign. They have so much data about the demographics of Tesla owners that Tesla can easily target the right consumers, rather than a broad advertising campaign which will be less effective and cost more per customer. People are talking about really low budgets though, some even in the tens of thousands. I hope and doubt this is the case. I think Tesla should spend at least $25 million on a campaign. If this increases demand by 25,000 vehicles a quarter, it only cost $1,000 per additional unit for this extra demand. And Tesla likely gross profit around $7,000 on the sale. In other words, an additional $6,000 operating profit per vehicle. This is an amazing return. And as Tesla increase their production with more models and we get up to around 3 or 4 million units a year, then we really could consider closer to $1 billion a year in advertising, particularly if Tesla has made some FSD breakthroughs and can promote those in the advertising too, as there is so much profit with each FSD sale, it's unreal. I made a video recently about how Tesla could actually hit $300 this year. I know it sounds hard to believe, but that's the thing, belief. When we see Tesla delivering on these promises, the belief of the company and mission increases, which in turn increases the stock price too. Tesla don't need the profits to back it up. They need the story to be believed by investors, and worried that they could miss out on the once-in-a-generation opportunity of a world-changing company. Then, of course, as the stock price rises, it encourages even more belief and FOMO as the market realizes, hey, this is an AI robotics tech company, not a car company. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.